please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they're trading higher, taking cues from Wall Street.
The terms of Brexiting have divided the cabinet and by implication the country itself. 2 ministers have quit.
Finance Ministry says we've already done what we could. This could be challenged by the power producers as saying that this doesn't take away the threat of NCLT.
I have no idea whether the Hindustan Zinc will be divested by the government.
The first trade is a little south of that, 10,895, but no worries, 898, 897.
We are not bearish, but and nor do we want markets to fall, frankly. But there has to be very selective bullishness here on.
You have to chase the value, not the price. Price will keep moving up and down.
1,035 crores is the net profit number. That's bang in line with what the street was estimating.
Market, it's been a good day. So the Sensex is now up about 200 odd points. And Nifty is past the 10,900 mark.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I am Prashant Nair. With me is my colleague Surabhi Upadhyay. Over the next 60 minutes or so, we are essentially going to track what happens. Will the strength stay? Will the strength build on? For now, unfortunately, the last couple of candles are a bit of a downtick. It's visible very much on the Nifty. It's very much visible on the Sensex. And I think maybe, just maybe, it's again sort of following up on cues, what Europe essentially is throwing our way. You look at the European indices, I mean, the DAX turned negative. I mean, no real news or anything of that sort, but the DAX was negative about 15 minutes back, and I think other indices out there in Europe have followed suit as well. So DAX is barely down, just down 2 points or so, but as a result of that, other European markets are coming off a little bit from the high point of the day. So from being 85 points higher, we're up 68. So a little bit of give back, but not much. So it'll be afternoon.
Good afternoon, Prashant. But I'd have to say, today I will give it to the bulls because it's taken a long time to get to this level. 2 months and counting. I mean, that's the kind of a frustrating trading band that this market has been in. And today we are right at that peak. Today this market has gotten back to the levels where we had peaked out the day the Karnataka state election results were announced. So that level of 10,926, that was taken out. We've made an intraday high of 10,940. Yes, we're off those levels, as Prashant was pointing out, but it's very, very interesting times for this market. And this is a real litmus test for the bulls. Can they build on any momentum from here on, or will this kind of just weather away? The good news for today's trade is, once again, participation. It's fairly wide. You've got a lot of metal stocks participating. You've got giants like Reliance Industries firing. TCS little nervous ahead of numbers, second day running, so that's a bit of a down point. Infosys and TCS are not participating, but a lot of financials, the Bajaj Finance and Finserv twins, some of the banks, the SBI, ICICI Bank. So there's a lot of momentum on different legs. That's the good aspect. And last but not the least, of course, the mid-cap market, second day running, has shown some traction. The advance decline ratio is still positive. You've still got lots of stocks dancing around in that universe as well. So that's the market that we have. But Prashant, I really guess it's going to be all about sustaining and, more importantly, building from here on. Otherwise, I mean, as the technical charters say, double top and those kind of phrases will come back in vogue.
I hope not. Let's hope that, well, you know, the all-time high is 2% away, Surabhi, right? 240 odd points. So it looks like a fair bit of distance, but it really isn't. You know, just a couple of points. I put this up earlier, but the fact is that, I mean, you know, globally as well, things have started to turn around for the better. And this is what is happening is very different from what we've seen over the last 1 month. What was the story over the last 1 month? There was, a spiral of negative news flow, and that is kind of paused now. The pronounced weakness was seen in Asian markets. You divide the global markets into Asia, Europe, and US. Maximum pressure and selling was seen in Asian equity indices. And what has happened last, 10 days or so is that is starting to reverse. We'll put out some levels, etc. in a bit from now as well. But the big story is that markets have stabilized. US markets, I mean, the S&P 500, the mother market, that is very close to taking out, the S&P 500 basically is very close to taking out a very important level. NASDAQ seems to be pretty bullish. And big indices in Asia like the Nikkei and the Hang Seng, etc. have also, I mean, they broke down important levels, but they've come back above those levels just this week. I mean, the Nikkei, for example, closed at above those levels just yesterday. So, you can give some global context to what you're seeing here in India as well. But we'll see if the strength sustains. 65 for now on the Nifty, 10,919 is what we have. We're also going to put out an interesting, important story in just a bit, and our colleague Sapna Das is reporting on that story, which we will get to in just a bit. But I think let's put out the closing strategy, Surabhi.
Yeah, so very quickly, here's what's lined up over the next 60 minutes. The market has taken out the Karnataka election result day high. Are the bulls finally taking control of the street? That's the question we're putting to our fundamental and our technical experts. On the fundamentals, we have Mr. SP Tulsian, Neeraj Diwan and Kunj Bansal joining in today. We'll also be discussing the portfolio strategy. What's the portfolio call in the current market? Which are the sectors that perhaps you could be looking at? We ask our alpha manager Viraj Mehta of Aquarius Securities. And of course, lots of trading ideas coming your way, including this rally on gas stocks. Can you do something about it? Is it a 1 hour bet? Is it a positional bet? We ask Ashwani as well as Mitesh.
Okay, we I think have an update going on the LIC IDBI Bank deal. We should put it up on the flashes as well. So government sources are telling CNBC TV 18 that LIC will likely need to make an open offer as part of the IDBI Bank deal. We are now joined by Sapna Das on the phone line for more on this. This is an important development. Sapna, over to you.
Yeah, so there are clear indications that, as per the SEBI guidelines, probably there'll be a requirement of an open offer, which is what the acquiring company will do. But we are also very clearly given to understand that, that may be a step which will arise as and how the, this transaction or the discussion or the proposal on this transaction goes forward. So as of now, officially, there is nothing that we can really write about, but a very clear indication coming from government quarters that open offer by LIC may have to be on the cards. Now, having said that, the other aspects that also have been flagged off and they could be slightly critical, keeping the overall transaction in mind, we've been very clearly told that the IRD approval basically has come in for LIC to hold 51% in IDBI Bank. It's an acquisition. And, this will be done with full management control. This is what we have been clearly given to understand. The third aspect, and there have been various news reports on the same saying that, government has asked for a premium from LIC for this transaction. Well, at least our sources have very clearly indicated there is nothing in the offing on that front. In fact, according to, informed quarters, government does not see any monetary benefit or any gains out of this transaction personally, government as an entity. Apart from this, we are also given to understand that as of now, they are in favor of dilution of the equity, basically indicating probably that the money will go straight to IDBI Bank. Nothing will come to the government side, at least as of now. That's what we're given to understand. Probably this will be by issuance of fresh equity by IDBI Bank as and how that transaction, that proposal goes ahead. Why this kind of a strategy as of now? Because the view in government quarters is that, probably the current stock price of IDBI Bank does not reflect the inherent value. That's one. Second, later on down the line, the government will always have, a window to kind of disinvest its shares as the valuations go up. So an upside for the government, for LIC as well. This is how they're looking at things.
Okay, remember, the open offer trigger is 25%, and once the open offer trigger of 25% is crossed, you got to make an offer for another 26%. I mean, that's essentially what the rules say, and the price essentially is, the average of the last 26 weeks or last 2 weeks, whichever is higher. I mean, look at the stock price. It saw a small jump, but it's barely budged, and that is essentially a result of the damage that we've seen in the stock price. By the way, the minority in IDBI Bank is pretty small. I mean, if you exclude the government and LIC, it's just about 6-7% or so, if my memory serves me right. But Lata is also joining in. Sapna stays on. Lata, what's your take?
I came exactly to put that math. What are you doing in terms of an open offer? It is 8%. You are pretty close. 81% is held by the government. 10.82% is held by LIC. So together they hold 92%. You're doing an open offer for basically 8%. Now, the government's position that, they don't want to divest to LIC, slightly hollow. because then what will be LIC's issue? LIC will have to pay, even if you assume 50 rupees is, you know, the last 6-month average or whatever, at a minimum 50 rupees, then it will be 250 crore out of 308 crore shares are held by the government. So that will be some 11,500 crore which LIC will have to pay to take the government stake in. And then they will have to capitalize the bank, which will be another 10,000 crore. I mean, this will be extremely laughable and, you know, extremely red in the face for LIC as the keeper of people's, people's policy money. And therefore, it's not a very it's not a matter of charity or good governance that the government is not tendering in. They are giving it to LIC because they don't want to capitalize. They want LIC to capitalize. Otherwise, it's too big a hole for the government to keep on filling. So it's but natural that probably about another 200 crore shares will be issued, fresh shares. So the LIC stake goes from the current 30 crore, maybe not 100, 200, maybe 220 crore will have to be issued. Then they become 51%. In the process, they would have, if you take the last price, say 50 rupees or 47 rupees, then that will be about 12,000 crore that
Lata, I'm just saying it'll probably have to be more than that, because I was looking at the price movement over the last 6 months. And in March, the stock did peak at around 80 rupees. So that's obviously just that one peak. But the average of the last 6 months, if that's the way the formula is going to be interpreted, then I guess it'll be, somewhere around the 55 to maybe even, high 50s range, which means more of a cash outgo from LIC.
See, there is no necessity for LIC to get 51%. But if in one shot it does, then okay, maybe it is 12 or 13,000 crore. But over and above that, an open offer, I doubt, it's not going to be a very expensive thing for LIC. But investors may still hold on because after all now, LIC would have capitalized it to the extent of 11, 12,000 crores.
Now that this is happening, I mean, we like it or not. So the other way maybe to think about this is that the government is not creating special rules for itself. I mean, in a transaction, an open offer is required. They are actually going ahead and doing an open offer. Because that was another thing.
This is a special rule. It's got the biggest life insurer of the country to buy out the bank.
I would think the biggest bending of the back is being done by LIC. Yeah. Policyholders' money put on the line. Yeah. On a bank
I began by saying, now that this is happening and they're bending those rules, maybe one rule not bent.
I guess one IRDA member has spoken to Yash and has said that, the spirit of the takeover has not been understood. I really want to know whether IRDA would have been so cool with the permission if ICICI had taken over a bank that is as in the situation that IDBI now is, or if HDF. I mean, they would have still said, oh God, this, exactly. Oh God, this is, policyholders' money. Are you sure you can turn it around? They would have asked some tough questions. In this case, obviously, because it's the sovereign and because LIC is stepping in to help the sovereign, I guess IRDA does not have a worry because LIC is backed by the sovereign. The policyholders' money to that extent is safe, and therefore they are taking the call that they are taking. My sense is it was always that government will not participate. It was always that, whether SEBI extends the open offer forbearance or not is such an academic question. How many shareholders, minority shareholders are anyway at stake? 8%. I mean, it's not a great deal. Most of that is mutual funds. I think the real retail minority is 2 or 3%. There are other insurance companies, mutual funds, foreign portfolio investors who hold the other 4 or 5%. So it's not a big generosity of spirit or sticking to principles against great odds when the SEBI forces an open offer. That's par for the course.
So
okay.
This is a really interesting conversation, and I really want to get Mr. Tulsian's take on it as well. But in just a moment, let's quickly address the market. We haven't given our viewers the last hour strategies as well. So let's quickly do that. Nifty's off the highs. A bit of a tapering that's happening right now, 10,931. Let's straight away take it to Mitesh and Ashwani for the last hour trades, and then we take the IDBI conversation forward with our guests. Ashwani, let's come to you straight away. Market action so far, what do you think, and what's to be done now?
It's a sideways to up day. Had it not been a strong uptrend, maybe it would have been sideways from the word go. But these sort of dips should be bought because you have the trend on your side to bail you out. So each time the market comes off 25, 30 points, the way to go is to buy the dip. Having said that, Cholamandalam is a buy with a stop of 1560, target of 1640. BEL is a buy with a stop of 110, target of 116. And Hindalco is a buy with a stop of 224, target of 238.
Okay, Chola, Hindalco, BEL, those are the trades coming in from Ashwani. Mitesh, what would your trades be?
Yeah, I would put a buy on State Bank of India, keeping a stop at 261 for targets of 275, and Repco Home is a buy with a stop at 575 for targets of 620. And Nifty, you know, we bought in the morning after the first dip when the Nifty once again crossed 10,900, 510 levels. I think one can, if somebody wants to buy a fresh, can buy with a 40-point stop right now, and I would look at targets of around 11,070 hopefully.
Okay, well, let's bring in Mr. SP Tulsian of sptulsian.com and Neeraj Diwan, Director of Quantum Securities, in the conversation as well. Good afternoon, Mr. Tulsian. Apologies for the delay. We just had that breaking story come in from Delhi. Your thoughts on IDBI Bank, really, and, you know, if there's any point, any merit in a new investor now even considering the stock, and what would the advice be to those who are still holding on to shares, watching the decline over the last 6 months?
See, Surabhi, if I just take up purely as an investor call or maybe as a pure investment call, probably I'll say that I don't think that there is much downside seen in the share price. For the simple reason, if you really see the controversy, we have already discussed the merits and demerits. I'm not going into those things that whether it is justified on part of LIC to acquire the IDBI Bank or not, because they had all the appetite or intentions to start to launch a bank. But if you just purely go by the maybe open offer and all that, I think that firstly the exemption not likely to be given to LIC from open offer is more to see that it should not be perceived that all the exemptions have been given here. IRDA have given exemptions to hold more than 15%, and if the open offer is also, so I take this open offer as a statutory compliance, more as a statutory compliance. But if as an investor, if I need to take a call, and if I say that when the 8% is the float with the non-promoter, that is the Government of India and LIC, and the entire open offer is likely to get accepted, I expect that the open offer will come somewhere at around 58, 59 rupees, or anywhere between 55 to 58 rupees. And that makes a good point to acquire the share at the current price.
Okay, so Mr. Tulsian is saying that could be 58, 59 rupees, and essentially the idea would be to buy the share and tender in the offer when it comes. So we'll have to see, pay attention to the dates, etc. as well. What is the cutoff date before which shares that one owns can be tendered, etc. I guess we will know. But the price reaction on IDBI Bank, which is not even a whimper, is actually quite telling about the interest or the lack of it for this one at this stage. Mind you, what Sapna has told us is that this is what what government sources are telling us, that open offer would need to be made, and the government is also of the view that it doesn't want any premium. By the time that from now till the point that this proposal actually reaches the cabinet for its clearance, there are lots of ministerial consultations, etc. So the shape of the proposal itself may change. So it's not a firmed up proposal which is now going for cabinet clearance in that sense. So I just keep that in mind. 77 on the Nifty. So we basically we've recovered those 10-12 points which the Nifty had lost. 10,930 is where we are at. Mr. Tulsian, do you believe on the market itself we are starting a new leg higher?
See, Prashant, one thing is seen certain, that the interest in the mid cap and maybe quality small cap is seen returning back. Because actually the fear which I've been saying, in fact, that you cannot expect the markets to remain hovering around or revolving around just 8 or 10 quality shares, where you will just be hiding. And that myth is seen breaking. And in fact, now the wider participation is seen happening. And in fact, in many of the mid stocks, because I've been saying that you cannot have your portfolio without having mid and small cap. It's just a matter of proportion or percentage, whether you want to have it 10% or 40%. So having seen that and the kind of valuations which we have seen for mid cap, I'm not trying to advocate here for buying the small cap stocks or the micro cap stocks. But in the mid cap stocks, those which are having the market cap of anywhere between 5,000 to 25,000 crore, in fact, many of them have seen quite attractive, and that's exactly market is seen lapping up, and I think that the sanity has prevailed. that yes, you look to have the investments in those quality stocks as well, because going forward, if you really see, which I have said in fact couple of occasions earlier also, that the Q1 numbers has to be seen in the background of the previous year Q1, which was the victim of the GST, and on a YOY basis, definitely all the results will be seen quite good, and even on a QOQ basis also, if there is no seasonality, I think the trend will be seen quite good and quite positive, and that will be what you call taken as a base for extrapolating the numbers or taking a call on the expectations of the FY19 number. So in this background, I think yes, the widespread buying is seen, which is right move, and which is a very prudent for the markets to really remain healthy, at least for the month of July.
It's a statement coming in from Vodafone, making all the right noises about getting that conditional approval from the DOT. DOT has raised a demand, pretty strong one at that, about 6,000 to 7,000 crores of pending dues that need to be cleared before it blesses the Vodafone Idea deal. Neeraj Diwan is also with us. Neeraj, your thoughts on Shriram Transport Finance? It's been a rocky ride, 2-3 trading sessions for this stock. What's your view now?
Yeah, good afternoon. Yeah, actually, I was quite positive on Shriram Transport Finance because of the uptick that we saw in your commercial vehicles, and some offtake started there. But the kind of corporate governance issue which came last week, that because of that issue, I would really change the multiple I was giving to Shriram Transport Finance. So my targets will definitely come down for this stock, and we definitely seeing some buying coming into the stock, but I think the upside now will be capped because investors which are long-term investors which put in good amount of money will be a little wary of putting in money for a longer term in this stock, at least till the time they forget this episode and then move forward. So I think for the short to medium term, I'll be a little cautious on putting money in Shriram Transport Finance.
Okay, we take a very quick break here. Neeraj, stay with us. We are back chatting with all our guests. In a bit, 78, 79 points on the Nifty. We're also joined by our Alpha Manager of the Day, Viraj Mehta of Equity Securities. That conversation also comes up with Viraj's stock calls and market view. Back in 2.
Welcome back. So we're tracking the market, which is once again making an attempt at the highs of the day. You can see that dip has been bought on the Nifty. Small dip it was, not too much of a dip anyway. And things are just moving higher now. Mr. Tulsian, there's a lot of excitement in gas stocks. You usually quite like this space, particularly the city gas plays. Now, two triggers. One is, of course, there's some talk about Reliance also making a bid. Today is the last day for those bids. And the second constant chatter is about gas being included in GST. So for an investor, which is the better side of it to play? Should you look at a big one like GAIL or some of the city plays like IGL or MGL?
See, two things. That one is that city gas distribution market is seen becoming quite big and quite broad. Because if you really see, earlier it was only confined to the metros and maybe tier 1 cities like about 10-15 cities and all that. But now actually earlier in the PNGRB there was no board members, and because of the lack of quorum and all that, this issue could not be taken up by PNGRB. But now this will get expanded maybe to about 80 to 90 towns, and eventually to 250 towns, and in the due course of time. And a lot of interest is seen evinced by many of the groups, rightly so by Reliance Industries, because this seems to be the synergy. Because if you really see their focus on the retail and the consumer oriented business. Now if I come on the gas part, maybe the existing players, that is IGL and MGL, who are pure the city gas distribution. In fact, both are seen to be quite growth oriented going forward because of this. And support like stocks like maybe Petronet LNG, who are the importers, and the regasification, this one, and gas authority, that is GAIL, and Gujarat Gas. Those things are also should be kept on radar. But I think I will be only focusing on the support stocks like maybe Petronet LNG and MGL, IGL. I won't be taking a call on the GAIL and other stocks. And if Reliance comes into the city gas distribution, which as I said, which is a very appropriate or synergistic business for the company, whether you see it from retail point of view or see from their presence in oil and gas, that will also be seen positive.
Okay, Neeraj, I mean, just a quick comment on this entire space if you do track it.
Yeah, I would also go with Mr. Tulsian's view that the distribution companies like IGL and Mahanagar Gas, I think they have been growing, and we can see next 5 to 10 years view also one can take and be a long-term investor, because about 15 to 20% growth will continue for some more years for these companies. So I think because of the consumption theme and going to other larger, smaller cities, I think these would be the two stocks which I would also suggest people to buy and hold on to.
Okay, Mr. Tulsian, before we let you go today, the one stock which is, I mean, its results have become almost a non-event, you know. First we used to say this about HDFC Bank, now we say this about IndusInd Bank as well. They've come and gone, absolutely bang in line with the estimates. Loan growth numbers looking healthy at 28% to about 30%, corporate or retail, whichever you're looking at. What's the call on the stock?
See, Surabhi, I agree with you, but if you really see, if you have tracked the results and then price behavior on the very same day, it has always been typical with IndusInd Bank that in spite of the expected numbers, the share has always corrected on the result day, but on the subsequent day, that is next day or thereafter, the stock has started moving up, and the same pattern or the same trading pattern, I won't be surprised to see it happening maybe tomorrow or day after that. Again, the buy call will start coming in, because if you have a credit growth of 29%, if you have the asset quality seems constant at 0.51% for the net NPA, and in fact the credit growth is seen to be excellent, or the robust, if you really take a call, which is at 29%, are seen to be. One may argue that the NIM has fallen by about 5 basis points on a quarter-on-quarter basis, but that's not a cause of worry, and even the provisioning norms and asset quality, everything is in place. So I think that stock qualifies a buy, and I won't be surprised to see it buying. We see the renewed buying coming back either tomorrow or maybe in the near term.
Okay, just a name which is buzzing on lots of volumes is Tirumalai Chemicals. I mean, it's up almost 9%. Mr. Tulsian, I think, did mention this yesterday while we were talking about that space. Mr. Tulsian?
Yes, Prashant. In fact, we are keeping, because in fact, if you see the phthalic anhydride and maleic anhydride, there are two players. One is this Tirumalai and second is IG Petro. And in fact, after having corrected, the share price having corrected, because of this mid-cap carnage in this last couple of months. And in fact, the realizations and margins on both the products are seen to be quite good. And in fact, there are no other players available. And yes, we have been in fact recommending that, look to buy Tirumalai. And Tirumalai is seen as a high beta stock. So it swiftly corrects and it swiftly moves up also. But on the peer comparison and on the product profile, as I said, of maleic anhydride and phthalic anhydride, I think Tirumalai and IG Petro both qualify as a buy from that space and from that angle.
Okay. All right, Mr. Tulsian, we'll leave it on that note then for today. Many thanks for joining in. Well, those are a couple of fundamental ideas coming your way. Let's get back to the market and look at the technicals. Holding on to the gains, I mean, you'd have to say 10,925, 10,930. We haven't seen any major decline coming in from these levels. Let's get some more trading ideas then. Sandeep Fagle is joining in. Sandeep, what are you working with?
A buy in a granule, stop loss of 87, target 96. And a buy in a Yes Bank, stop loss 364, target 381.
Okay, Sandeep, thanks very much for those trades. The market is, 72 higher, so it's not as if it's running away on the upside. But it's, looking and sitting pretty strong. Just a couple of other names I just want to highlight before we bring in our next guest. Amar Raja Batteries, if you can pull these intradays up, 823 or so, it's up 5%, large volumes. Cholamandalam Finance is up 7%. Again, decent sized volumes on Chola. I mentioned Tirumalai. Look at Sadbhav Engineering, which is up about 6%. There is these ITDC and ITI type stocks which are also buzzing. Again, they're not thinly traded right now, decent volumes. Take Solutions, 6% has done extremely well this year. That is again coming up as a strong gainer. Mastek is up about 5%. There is Praj Industries, which is up about 7%. JM Financial is up 8% or so. And Dilip Buildcon continues another day of gains. Low was 600 on Dilip Buildcon. And 2 days in a row, it's been sort of locked up, 5% each. Dilip Buildcon is up 5 again today. Viraj Mehta is head of PMS and fund manager at Aquarius Securities. He's joining us on the show right now. Viraj, good morning. Good to have you here. Is
good morning.
Is being very risk averse the real risk right now?
So, yeah, I mean, if you hear everybody, and if you hear to a lot of retail, a lot of HNIs, a lot of small and mid cap fund managers, a lot of the real risk, you're right, is being risk averse. But the idea is irrespective of where the market are, is to look at companies which can generate significant alpha over a period of time. Now, in last 6 months, what has happened is that a lot of such companies which were trading at a really high valuation of 20-25 times have fallen anywhere between 25 and 30%. So now all of such good companies you are getting at 17-18 times. Now, can it fall 5, 10, 15% more? Surely it can, but can you buy such compounders at a very, very reasonable price today, and you should start looking in a very major way? I think so. I think the worst thing right now or to do is probably look at a consensus trade and trying to look at only consumers and private sector banks, where these guys are now trading at a significant premium to their last 5-year averages. So that is something we are definitely not doing.
Then I want to know what you are doing, Viraj. That's an interesting point you made, because even for us, I mean, the answers are also well rehearsed, right? Most of the managers want to go for the tried and tested in the same, which is retail private sector banks, which is consumer. So what do you have your eye on?
So I think it's very easy to paint everything with the same broad brush. So, for example, if you look at last 1 or 2 years, PSUs in general have been a huge underperformer, have been a big wealth destroyer. But that is regarding banks. But if you look at, apart from banks, there are a lot of businesses which are doing reasonably well. For example, let's say you look at a company like Bharat Dynamics. It's the only missile short and long range manufacturer in India. It IPO'd last year. Today it has revenue visibility of at least 3 years with 11,000 crore order book, and you're getting that at around 10-11 times operating cash flows X of net cash that it has. Also, there is a company known as Rights Limited, IPO'd recently. Today you have that company available at 30% of its market value in cash. It's an asset-light business which is doing consultancy work majorly for railways, but it is also into consultancy for ports, roads, and that business is available at 6-7 times operating cash flow and growing at 15-20%. And all of these guys give excellent dividend payout. So I think the problem today is that everybody wants to paint all the PSU companies with the same brush. I have no doubt that some of them will destroy a lot of value, but there will be some companies like NBCC did in the past which will grow at a reasonable clip. And today, because of the negativity for the whole sector, you are getting those businesses also at a very reasonable valuation. So we like such businesses even in PSU space. So that is one space that we think can do well.
The Bharat Dynamics that you said, is it similar to BEL? I mean, dependent on the defense business in a large way.
So some of some of the businesses are similar, but BEL also has the potential to actually have a lot of for manufacturing of mobiles. It has a lot of white spaces left that it can do. Though today it is fairly dependent on government orders for its revenue. But yeah, in general, I am saying that you could look at such businesses which are slightly lumpy in nature, but are being painted with the same brush along with all the PSU banks and some of the mining companies.
No, but the issue is BEL, for example, it's been waiting for these. I mean, actually 2 or 3 very large orders, right? One is the Akash missile platform. Then there's a
Yes.
Navy order. Now, one doesn't know when it will come. It could be
That's
6
right.
months, 2 years, 5 years, who knows? When it comes, maybe the stock is a doubler then. But the point is, it's extremely lumpy. Is Bharat, my question is not about BEL,
Yeah,
but
so-
Bharat Dynamics is also like that? Or is it different in some way?
So, Bharat Dynamic today is at around 4,300 crore revenue top line. If you look at its current order book itself is more than 11,000 crores. So there is reasonable growth visibility that we have on that business right now. So even if it doesn't really get orders for next 1.5 to 2 years, you will see them growing at around 10 to 15% from this top line. So and the orders could be lumpy, but we refuse to believe that India's defense budget will not grow at a reasonable clip over next 5 years as well. So it could. So for the short term, we have reasonable visibility, and for the longer term orders, I think if you look at the history, there is reasonable evidence for its growth. And the entire reason the valuations are so cheap is because the business is lumpy. But we don't mind lumpy 20-25% CAGR compared to a fixed 10, 12, 15% kind of a return, because that's what we get paid to do. 25% lumpy is far more acceptable to us than a 12-13% compounded.
Okay, back to today's high on this market. The bulls want to make sure that they keep announcing that they are in control. There was a tiny dip. There was a barely 20-point dip that we got today, and that's been bought into. Let's pull up the intraday graph once again. There you go. You've got fresh highs, 10,940. So today the bulls are saying, listen, do not doubt us, because you know we're here and we're announcing our arrival today. Pull up HDFC. It's HDFC all the way that's led to this current round of the surge that we are seeing. That's the big move that I'm talking about. Look at that. HDFC really, really powering through with that 2% up move. Lever is turning around. Lever has been dragging its feet since the morning. Still down, but now it's trying to sort of, break to the upside. Let's see if that actually happens or not. So market extremely strong. Viraj, in the past, you've also liked rice exporters, I believe Nimesh was telling me. Now, interestingly, we did speak to a lot of the companies, and after this MSP increase on paddy, many of them were saying that, you know what, hey, on the basmati side, we'll become a little uncompetitive on the export front particularly. Your thoughts there? Anything else? Any of the other non-consensus ideas that is exciting you at the moment?
So yes, so just to complete the short point on rice exporters. So basmati, there is never an MSP. But even if you look at the current 13 or 14% increase in the non-basmati rice, that will affect the sowing for basmati going forward. We'll have to see how that pans out. But I don't think getting 3 or 4% price increase is too much of a trouble or problem for these guys. And look at rupee, right? Rupee has gone down or depreciated from 64 rupees to $1 to 68, around 68 $1. That's almost 6-7% increase in your realization without even going to a customer even once. So I don't think these 10-12% price increase or decrease really matter a lot. These guys have to today, as I had repeated last time, is a large opportunity is there, because almost 30% of the exporters market, they are not getting any working capital. So some large players and mid-sized players who are doing very well and are getting working capital and improving their margins should see a reasonable runway of growth for over next 2 to 3 years. Apart from that, as you said, some non-consensus. What we like is some of the agrochemical companies. So there is a lot of negativity around this agrochemical space. Per se, a lot of global, if you look at globally, the price of technicals, which is the RM for agrochem players here, have gone up. The agrochem within the distribution space, the inventory these guys were carrying has gone up. So, but if you look at in India, if you look at players which are end-to-end, they are integrated. So something like an Excel Crop Care, which is end-to-end integrated. and can get technicals and newer products from its parent Sumitomo Japan, I think there is significant leverage these guys have on their P&L when they will be able to grow their top line at 20% plus. You have seen consistent margin increase and cash flow betterment at the balance sheet level for these guys. I think there is significant runway for players like these, both for their export oriented business as well as their domestic business. So really positive on some of these end-to-end integrated agrochem manufacturers.
Okay, and Excel, by the way, is having a very good day. It's up 8%. The other one, which Viraj also likes, Mr. Tulsian also pointed to it, is Tirumalai. Tirumalai also is something that Viraj likes. And I think he's added it recently to his portfolio that is doing very well as well. Rights, Bharat Dynamics, Excel Crop Care, I think Chamanlal, rice exporter, Tirumalai. These are some of the ideas which Viraj sort of put out. Thanks very much, Viraj. Appreciate you joining in. Good speaking with you. We will take a very quick break here with the news that we're up now 93 points. So racing towards the 100 odd point mark. So 10,946 on the Nifty. We take a very quick break and we put out some buy today, sell tomorrow calls. Our experts are here. So stay tuned. Back in 2.